Stocks drift lower as global uncertainties linger. Telecom and consumer durables are the bright spots, while utilities, auto and FMCG stocks are sulking. Bharti Airtel beats estimates, riding on a good show in India and Africa, with average revenue per user seeing a strong 10% uptick. The board also clears an additional 5% stake purchase in Indus Towers. Both stocks perk up. Titan reports an inline quarter, riding on gold ingot sales even as jewelry buyers thin. But a dip in gold prices in the third quarter has seen buyers return, driving up sales by more than 25%. The company tells CNBC TV18 the stock gains. After a rush of marquee investors for its anchor book, Billion Brains Garage Ventures, which owns India's #1 broking firm, Grow, has launched its 6,600 crore rupee IPO. Grow tells CNBC TV18 that margin trade funding will be the big growth driver. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia. We are counting down to 5 major Nifty results in just a few minutes from now. And of course, the markets, well, still struggling around about 100 points lower on the index. It managed to defend yesterday's low just by about 3 points, 25,648 being the intraday low for the Nifty, still 20 points away from that level. It's still not managed to break past yesterday's high, so the lower high streak continues. It'll be interesting to see if the lower low streak continues as well for the 5th straight session for the Nifty. Counting down to 5 major results. SBI numbers should be out in just a few minutes from now. The stock was at the lowest point of the day on last check, 0.6% lower. Of course, the stock is near its 52-week high. Keep that in mind as well. Mahindra & Mahindra, the other major Nifty company, reporting results today. That is, of course, at the highest point of the day, 0.5% higher on that stock. The new Nifty entrant, Interglobe Aviation or Indigo, also reporting results today. And keep an eye out on that stock as well. Remember, Indigo has also seen a significant up move and has just corrected slightly from the peak that it has seen. So 1.5% lower on Indigo at the lowest point of the day. And the two Adani Group companies, part of the Nifty 50, Adani Enterprises and Adani Ports, both of them reporting results as well in just a few minutes from now. Adani Enterprises down 1% near the day's low, and Adani Ports at the day's high, 0.4% higher. Just a couple of results that came in before we got on to the earnings. Bansal Wire was one such name that reported results. The stock is down around 4%, and as did Snowman Logistics, reported a loss compared to a net profit in the previous quarter. That stock too trading with losses of around 4.5%. But telecom as a space continues to remain in focus. Bharti Airtel, Bharti Hexacom, all of them reported results. But Bharti Airtel and Indus Towers are the two focal points. And Rima is here to tell us more on that. Rima.
Thanks so much for that. So, Bharti has been such a big mover. It's up 30% in the last 1 year, nearly 150% in the last 3 years, and brokerages are very bullish. So, Jefferies' target price stands as high as 2,635, but Citi CLSE also very bullish. Now, overall Q2 numbers were a beat. The big beat came in from Africa. For India, that premiumization story continues. So despite no headline tariff increase, the average revenue per user, ARPUs for the company, keep going up. So even this quarter, Q2, we saw a 10% jump in the ARPU, and that's the big, play when it comes to Bharti's India mobile business. That because 2G subscribers are converting to 4G, 4G moving to 5G, the premiumization, Bharti has been a big beneficiary. But what's also interesting is the company announcing that they have an enabling resolution from the board to invest of up to 5% stake in Indus Towers. Now, already Indus Towers is consolidated with Bharti because Bharti has a 51% holding in Indus Towers. So why this incremental 5%? Why does the company want to purchase this incremental 5%? That's something which investors are also still coming around to.
Rima, thank you for that update. And just as we were mentioning, the first of the 5 Nifty results on your screens, Adani Ports, 30% revenue uptick from last year, 9,167 crore. And the profitability as well has seen a similar uptick, if not more. It's almost a 30% uptick in its profit as well. We'll be watching out for the margin figures. They had just come out with their cargo volumes for the month of October just a couple of days ago, and profits also up around 27% on a year-on-year basis at 3109 crore for Adani Ports. The stock not doing much as of now. We'll get you more as the margin figures and the operating performance comes in as well. But focusing on some of the other stocks that are moving around on the back of their results, Vinny is joining in with more on that. Vinny.
Hi, afternoon, Horma. So let me start with SJS Enterprises. The stock is buzzing in trade, healthy Q2 numbers, highest ever quarterly revenue and profits. Look at the revenue growth, 25% revenue growth, 41% improvement in terms of EBITDA, as well as margins seeing a 300 basis point expansion coming in at 29.6%. Apart from that, 3M India, that's also among the top gainers in the Nifty 500 as well today. Strong performance on the operational front. All the four segments have reported a double-digit growth. The revenue is also seeing an overall growth of 14%. And margin seeing an expansion as well. 21.2% is the EBITDA margin versus 18% last year. Hitachi Energy, while revenue was slight bit of a miss, but the profits and the EBITDA and margin front, that's something that beat the street estimate. The strong operational performance, when you look at it in terms of EBITDA margin, 16.26% versus just a 6.98% last year. So good performance there. And other than that, other income, that is something that has seen a sharp increase. That is leading to a better performance in terms of the profitability and lower OPEX. That's operating expenses. That is something helping and aiding the profits of the company. That's why the profits also have seen a sharp jump up to 64 crores versus just 52 crores last year. City Union Bank, that's another one we're keeping an eye out on. They also reported good numbers in terms of NII growth coming in at around 14%, net profit of 15% growth there, and improvement in terms of the asset quality. So that's why the stock is up in trade. TBO Tech, that's the next one. Good performance this time in Q2 as well. Overall revenue saw growth of around 13%. I beg your pardon, profit saw growth of around 13%, while revenue saw growth of 26% as well. Lastly, Gland Pharma, that's under pressure today. They missed the street estimates. Poor growth in the legacy business as well as higher than expected expenses from the Senexi subsidiary. That is something that has impacted the overall performance. Regulated markets also saw a flat growth on a year-on-year basis. So a bit of a subdued trend that is coming from Gland Pharma, and stock is down in trade.
Vinny, thank you for that update. Lots of result reactions, and one more addition that I would want to make to that list. Blue Jet Healthcare numbers came in just a few minutes earlier. The revenues are down, profitability is down as well. The stock is also down 10%. So keep that on your radar as well. Is Blue Jet Healthcare, the 9.5% lower there at the lowest point of the day. Shifting focus to the other major result in a few minutes from now, SBI. Gaurav is joining in with the key expectations. Gaurav.
Well, as we are expecting result anytime soon, but when we look at the expectation, when we look at the advances, we are expecting to see around 10% growth on a year-on-year basis. Deposits, we are expecting to see the same kind of growth, around 9% on a year-on-year basis. And as a result, when we look at net interest income, we may see 2% decline on a year-on-year basis. And the reason being that the pressure on cost of funds, that will still remain. That is what the expectations are. PPOP, which is pre-provision operating profit, we are expecting to see around 6% decline, and for profit we may see 7% decline on a year-on-year basis. But what is positive is that SBI is one of the banks where Street is expecting just single-digit decline in net interest margins, and they are expecting around 6 basis point of decline. It will remain somewhere in the region of 2.84%, while credit cost, now we may see some positive surprise here. Now Street is penciling around 4 to 5 basis point of decline in credit cost sequentially, but let's not forget that SBI is known for its pristine asset quality, and that is the reason why we are likely to see some kind of positive improvement here. When we look at the comments, we may see the comments on net interest margins, which will be a key thing to watch out for. And the second is that on the growth, how management sees growth going ahead, because it is the largest bank of India. And remember, they are also focusing on the corporate growth, and the corporate growth is also at a juncture from where we may see some uptick from here. So definitely that is something that we will be watching out in terms of commentary. But in terms of number, we're expecting stable set of numbers from SBI in this quarter.
Stable earnings anticipated. Gaurav, thank you for that. The other major result is Mahindra & Mahindra. Sudarshan is joining in with what to expect from that. Sudarshan.
For Mahindra & Mahindra, we are expecting a mixed set of earnings. Because the reason we are saying mixed, because there can be a sharp increase in revenue, supported by an increase in the auto volumes, while there can be a minor dip in the margin because of increasing EV mix, that is electric vehicle mix. So profit may increase by 6%, revenue can see an expansion of almost 25%, EBITDA too can increase by 19%, while margin can come below 14%, may come around 13.8 to 13.9%. If we talk about the realization, on a YY basis, there can be a minor fall of 1%, but on a sequential basis, here also we can see an increase because of an increase in the auto volumes, because total volumes also on both sequential as well as on year-on-year had seen an expansion. Now, what exactly we would be looking in the management commentary? What does company say on the outlook for FY26? Because as of now, for PV industry, that is passenger vehicle industry, the outlook is of low single-digit growth. Also on CAFE emission norms, what's the strategy of the company? And lastly, on the launches front, what's the outlook? But as far as the earnings are concerned, we are expecting a mixed set from Mahindra & Mahindra.
A mixed quarter expected from Mahindra & Mahindra. Sudarshan, thank you for that. And putting the spotlight now on the primary markets, it's the last day to subscribe to the Lenskart IPO. As of noon, the issue has been subscribed almost 4 times. The institutional portion was subscribed almost quarter to 2 times. The non-institutional portion has been subscribed 5 times. And the retail portion too has seen a subscription of around 4.5 times. Remember, the retail portion is only 10% of the total IPO. Lenskart employees have also subscribed to the issue by 3.5 times the total number of shares on offer for them. Now, Grow's IPO, that also opened for subscription today, and the retail portion is already fully subscribed. And this too has retail portion only 10% of the total IPO size, and they were subscribed, of course, within 3 hours of the issue opening. The non-institutional investors have bid for a quarter of their quota, while the total subscription overall stands at around 26%.
We are highly profitable. We are roughly at a 45% profit margin, and we think if we can keep on growing our revenue, we can even increase this percentage further. So typically the way we look at our business is our business grows or the revenue is dependent on how many customers that we have, and we keep on acquiring the largest chunk of the customers in the market. And the second piece is the ARPU, the revenue that we generate per customer. I think we've been seeing growth on both sides. It's just that sometimes the users grows faster and sometimes the ARPU grows faster. Between both of them, we are able to deliver 25 to 30% kind of a growth rate on the base effect basis. MTF as a business has started contributing 3% in Q1, and I think on a full year basis is significantly higher than that. And hence the broking revenue will, as a percentage of total revenue, will reduce a little bit. But what we are seeing is every product that we launch new, especially MTF, and now we recently launched commodities as well, is able to actually scale much faster. And hence our revenue growth has a extra lever with every new product that we launch.
I'll take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, OpenAI has signed a deal to buy $38 billion worth of capacity from Amazon Web Services, its first contract with the leader in cloud infrastructure. CNBC's Mackenzie Sigalos gets all the details.
OpenAI is teaming up with Amazon for the first time ever on compute in a $38 billion deal that makes AWS the newest hyperscaler to power ChatGPT. Now, the partnership gives OpenAI immediate access to hundreds of thousands of NVIDIA GPUs across U.S. data centers, with AWS set to build dedicated infrastructure for OpenAI's future models. Amazon's VP of Compute and Machine Learning Services told me that the capacity is already live, ramping quickly through next year, and powered entirely by NVIDIA, not Amazon's in-house Trainium chips. Now, this contract was months in the making and marks OpenAI's first major infrastructure deal since Microsoft's right of first refusal expired last week, really clearing the way for CEO Sam Altman to sign with Azure's biggest rival in the cloud wars as Microsoft and Amazon go head-to-head for AI dominance. Now, for Amazon, which just hit a record high and is guiding to roughly $210 billion in Q4 revenue, it is a marquee win, proof that AWS can power competing AI labs like OpenAI and Anthropic simultaneously. And for OpenAI, which just met all the prerequisites to close a $40 billion funding round, it underscores how capital-intensive this AI boom has become, with nearly that same amount now going toward its AWS compute alone, plus a $250 billion commitment to Microsoft Azure. In total, OpenAI has lined up more than $1.4 trillion in infrastructure deals as the race for AI capacity goes into overdrive.
Mackenzie Sigalos, thank you for that update. Now, David Solomon, the CEO of Goldman Sachs, says that the buzz for AI must be getting ahead of what the technology can actually deliver right now. Listen into what he had to say.
There's a lot of focus right now on data centers and chips and compute. And some very smart people I talk to are focused on a lot of value being created in applications and the application layer. But whenever there's excitement about a new technology, and this is real, people believe the opportunity, and generally speaking, things run ahead of the speed at which it ramps up. My guess is we'll see some of that here. But in the long run, these are really interesting opportunities, and a lot of capital will be winners and losers, just as there always has been.
Let's also listen into some views coming in from Howard Marks, who's the co-chairman and co-founder of Oaktree Capital Management, who shares his take on the U.S. economy, the recent meetings between the U.S. and China, and the Fed's future.
The takeaway is one of pragmatism, that these are two great powers, both of which possess great strengths, both of which need the other. And the other thing is that it's really important to realize that in its 80 or 100 years of primacy in the world, the U.S. has really never had a real rival in economic terms. We thought Russia, USSR, was a rival, but it was a facade. China is a real rival. It has great strengths, it has dynamism, it has rapid growth, it has enormous human resources and focus and purposefulness. So the U.S. has to learn to live with the strong, legitimate rival, but rivals don't have to be enemies. I think that Jay Powell will lose his job in May and be replaced by definition by somebody that the administration likes, and the administration wants lower interest rates. So what will be the effect of the interest of the administration's desire for low interest rates on what the Fed does? That's the big question. The competent management by the Fed is a very important component in our financial system, and nobody wants to see that tampered with.
We'll take a short break. More news and updates on the other side. Stay tuned. Numbers of Mahindra & Mahindra on your screens, 4521 crore, the net profit higher than what analysts were expecting, a 25% growth each in the revenues of its automotive business and the farm equipment business as well, both of them showing growth of around 25%, revenues at around 33,000 crore. That will be on a standalone basis, of course. We'll get back to that revenue figure. The stock has now surged to the highest point of the day, the EBITDA at 4862 crore. The CNBC TV18 poll was 4759, so it's higher than what the CNBC TV18 poll had anticipated, and the margins too at 14.5% compared to 13.9%, so higher than polls. Prima facie first cut numbers looking a beat on what the CNBC TV18 poll had anticipated. Net revenues at 33,422 crore. That's a marginal miss in comparison to what the poll was anticipating at 34,294 crore. It'll be interesting to see what kind of volumes the SUV segment and the tractor segment has reported during the quarter. We'll wait for more management commentary to come in as well. But as of now, barring the revenue figures, the other metrics look a beat in comparison to expectations. We'll get you some reactions as well to these numbers. And based on what our colleague Sudarshan had highlighted, the total volumes were up 1% from last year. They were up 19% on a sequential basis. The auto volumes were up 7% from last year and 14% sequentially as well. And the tractor volumes were down 8% from last year, but they had risen 30% on a sequential basis, and as a result of which, even despite the fall in volumes, the tractor segment revenues have seen healthy growth on a year-on-year basis. So on first sight, the numbers look good in terms of most of the parameters, at least on the margin front and on the profitability front. The stock in itself has done fairly well for itself. It's up almost 25% in the last 1 year, 16% on a year-to-date basis. It has come off slightly from its 52-week high levels. The 52-week high is around 37.23. The stock currently at 35.60. EBITDA is up 23% on a year-on-year basis, and the margins too, 20 basis points expansion compared to last year, and of course a 60 basis points beat compared to the CNBC TV18 poll. The stock saw a brief spike but has come down from those levels, so we'll keep an eye out. The management is set to address the media in just a few minutes from now, and they are waiting for more and how the commodity headwinds have impacted or have kept the margins in check. What could have been a more higher margin expansion, but it's only 20 basis points from last year. Of course, we are awaiting more commentary on the demand outlook, the new product timelines, and of course the strategy to meet the cafe-free norms. That's Mahindra & Mahindra for you. We'll continue the action on the other side of this break. For now, the numbers, barring the revenues, look a beat in comparison to expectations. We call time on this edition of Business Lunch. More action on the other side with Midcap Radar.